Hello everyone, Paul here from the Pen Academy. Hope we are all doing well. So in the previous video, I hinted a bit on this DXY, and I told you guys that I will not speak about it until it made a breakout. Remember, we spoke about it. We said it will touch here. We expect it to go up and play inside here until it either breaks upwards or it breaks downwards. So it broke here at the closure of yesterday, but I just wanted to speak about that. I expect the retracement to this level here. It has not yet happened, which is very good, meaning that we are doing the update on the right time. Now, before I go further, I just want us to talk about this in the context of correlations. Now, what is the correlation? A correlation can be negative or positive, but in a layman's language, it similarly means that you're comparing two aspects and seeing how their behavior is in connection to each other, right? For example, in the trading terms, we're comparing two securities, want to see their movements in the markets. How is it? And normally when you talk about correlation in the markets, there has to be a common denominator. For example, if I'm speaking about correlations in pairs, let's say Euro USD and let's say USD CHF. Now I can compare these two currency pairs because there's a common factor, which is the USD here, right? That's the first type of correlation. The second type of correlation can be you comparing a security with the economy where it comes from. For example, those of you who trade stock indices like the Nasdaq, S&P 500, Dow Jones, etc., even the Nikkei, those who trade the Asian markets, Nikkei. Now, these things are correlated with the currencies of the economies where they come from. For example, the Nasdaq has a connection to the USD. The strength of the USD affects it, and how the economy of the US is performing also affects it. That's the second type of correlation. The third type of correlation is when you're comparing the security to the economy, to the backbone of the economy where it comes from. For example, your country may be depending on gold when the major thing that boosts the economy or brings in major finances to your economy. Let's say it could be gold, right? Many countries depend on gold. Their major economic export is gold. So when gold is performing well, you find your currency is strong, like that, etc. That's the third type of correlation. But today the correlation I want us to look at here is the last one, which is correlation to the currency index, right? Also, there's that type of correlation. Now, the rest we shall be talking about them in a different video. Just wanted to make the video short so that it's not so long because I hinted about it in the previous video. Now, this DXY, so DXY is down to measure the strength of the USD. Now, the correlation between the DXY and the USD is positive. If the DXY is going down, because this measures the strength of the USD, right? If the DXY is going down, that's why I was saying we'll wait for it to break here or break above. If it's going down like this, it means the dollar is weak. If you check all the dollar pairs right now, they're a bit weak. For example, Euro USD, you can see it is buying. AUD USD is buying. New Zealand USD is buying. If you look at gold, it's buying, right? Though gold, I mentioned something about it that fundamental play also can change it. Sometimes it can change the technical movement and structures. But other factors remaining constant, it's directly proportional to the strength of the dollar. The DXY, its movement is the same as that the one of the dollar because to measure the strength of the dollar. So since the DXY has broken down, what do we expect? We expect a small movement to retest here. So a strong dollar for a short term before we can start doing something like this. Are we together? So now let's look at the correlations that we're looking at here. So let's start with the gold, right? I want us to look at gold. I spoke about gold a couple of videos back. I hope you guys followed it. So when you go to H4, you can just watch that video. I'm going to attach it also. When you come to H4, I spoke about this gold here coming to retest this level here. Then we start moving up. But our target was this one here because we expected that DXY to correlate to range a bit, though it didn't range for some long time. Then it broke above. So above here, those who really have been following our teachings are the ones that saw this breakout and retest, right? And then it continued upwards, right? So in case, that's why we put in so much efforts for you to understand the teachings. Do not cram. Those who are complaining about time frames are the ones who are cramming things. You want to use exactly, if this guy is using H4, I want to use H4. H4 may not be suitable for you. It may be suitable for you. Choose what is suitable for you, okay? do not just try to force. Trading is a personal thing. Are we together? That's why you see people say indicators work, others say don't work, others say work. This does not work. Use volumes. Volumes don't work. Use this. This works. This is the strategy that works. Please, it's a personal thing. Only use what works for you. Are we together? So we spoke about it from here. It retested, pushed higher, came retested this level, broke above, came retested, and then it kept trending upwards. We have showed you guys how to mark levels. But this is old history, right? Like I've said, I'm going to attach what happened at the previous video there. Now let's do it afresh. When you start looking at the monthly time frame, recall we said that the market had not tested which level. It had not tested this area here, which we wanted the price to come back to, if you guys recall very well. And what happened? The price came back and tested this area here, right? So what are we interested in right now? We're interested in this price coming back to retest this area here. Are we together? If price can come back to test this area, since it is approaching now here, right? It's approaching, actually it will be best if it broke above, or even if it closes around just this area here, then we can have a small pullback, right? This is what the direction is giving us. The direction is saying we are very bullish. After a W, we had a neckline to be retested, improper retest, but we had now a proper retest. I spoke about this in the previous videos. Then we pushed higher. Now, since we have broken above these levels, you see this was a strong resistance, pushed price down, pushed price down, pushed price down. Also, your price reacted, attempted to break, but failed. Then now currently we're above. So we shall need that retracement, a small one, either up to here or up to somewhere here. Then we can push. We shall see it in the next lower time frames, right? So let's go down to the weekly time frame. What do we observe in the weekly time frame? Weekly agrees with us. Are you seeing? This is all the resistance area. So push there. Now, also again, what we are seeing in weekly is we have a W plus an aggressive move. What did we say when you say an aggressive move? Whenever you see an aggressive move, we bring in Fibonacci, but we only bring in Fibonacci when we start seeing the opposite move coming in. For example, right now, we only have bulls. If we start seeing, maybe next week starts selling a bit, bring in your Fibonacci and draw it. For example, I'm assuming the week tomorrow ends where it is or slightly higher, like here. You can bring in your Fibonacci, start seeing the opposite candle. Not now. Right now, there's no sell candle. So you're not supposed to use it, but I'm just telling you in case it happens. When a sell candle comes in, draw your fib level, mark the fib levels that I like, the same way I showed you, right? So this is another confluence. So also it's suggesting that monthly we expect a retracement. Weekly also we shall be expecting a retracement. Why? Because we have broken this turning point and this turning point. Possibly also if we close above this, we shall have broken almost more than 3 turning points. Are we together? So those who trade gold, we shall expect a retracement. When you go down to the daily time frame, daily is very, very clear. We do have a market that made a high, higher low, high, higher low, broke above this and retested. So those who use smaller time frames may not have seen this, but those who start doing your analysis from the daily time frame, you could have seen this break and retest here nicely, right? To start pushing higher. The market closed above nicely, a proper break, full body close, retested it in a weak manner, and then pushed higher. So this is an impulsive move. Do you guys see this move here? This is an impulsive move. Are we together? So after an impulse, what do we expect? A correction. So when there's an impulse, you bring in a fib tool idea, right? So, but you don't bring it in unless you see a red candle, right? So when red candle comes in, we shall draw a fib level to bring it down here. Then you look for your change of trend to continue higher. Now, if you look at monthly, weekly, and daily, all speaking the same thing. Now, how do we connect it in the correlation way to the DXY that we have just spoken about? Now, remember we have said that, excuse me. Remember we have said that, where's the DXY? Let me just open the chart again. Remember we have said that we're expecting the DXY after breaking here to gain some strength. We have said if the DXY is going up like this, we expect the dollar to gain strength. So we shall expect when the market is doing this retracement on the DXY, this is the correlation I want you to understand. It means also the dollar will be strong. So when the dollar is strong, what do we expect here on gold? Let's just go back to gold. We shall expect also the dollar to be strong. Remember, the gold is XAU USD. So we shall also be expecting it to go a little bit down. Are you guys seeing the relationship now, right? So we shall be expecting it to also go down, which gives us the retracement, but I've not marked them, the other layers up. I've just marked this one, the other layers up here with the fib level. Some of you can say that there's an imbalance here, there's an imbalance here. You can mark them depending on what works for you, even there's an imbalance here. Depending on what works for you, but for us, we just use the Fibonacci retracement areas. So, and the rules have not suggested that we use it yet. Are we together? So all our big time frames are suggesting they shall have a retracement, even the correlation with the DXY. So when you want to, if you're experienced a bit, so now as the market is pushing higher, what are we interested in doing? We want to see the market give us a retracement here. You can, retracement. You can look for change of trend. in your entry time frames. Personally, I love using H4. So if you to look at H4, let me just expand the screen. When you to look at H4, the market is still very, very bullish. So we're interested in change of trend. So we have higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So when the market changes, we start making lower lows and lower highs. Look for your change of trend, and then until that level of fib area, or if it breaks all those levels, you can trade up to lower here. So in this video, I just wanted to give you an idea of what a correlation is, and I wanted to use the last example of correlation, whereby you're comparing the currency's index to the currency's strength itself. I've given you other types of examples of correlation, which we shall be speaking about in other videos. We shall make videos about correlation so that you can understand them very, very well, right? Let's do one more example. I can do an example on another pair that people love trading, which is Euro USD. We have also spoken about Euro USD a couple of times, right? We spoke about it when the market was still down here, wanted it to come back and retest up to this area here. So I'm just going to, you can just watch the previous videos. I'm just going to remove here. Starting from the monthly time frame, what do we observe? Let me just clear this. So starting from the monthly time frame, we spoke about this area here as it has not been broken and the market was still above it here. And also wanted the price to come and touch this area. It missed it by some few pips, very, very few pips here, and it bounced, right? So the market has bounced from support and pushing higher. So the next threat we could be having is this area here, right? I'm just going to mark it for direction purposes. Let's check what weekly is showing us. Now, when you come to the weekly time frame, what do we have? In the weekly time frame now, we do have a market losing momentum here, and now we're looking for this neckline area here. Are we together? So the market is approaching this neckline area. Remember the DXY, we are saying that it has broken downwards, but we're expecting it to go and retest the area it has broken, the DXY. So when the DXY is gaining strength, the dollar also will be gaining strength. And what is this pair? This pair is Euro USD. So when the USD is gaining strength, it means Euro USD will go a little bit down. Are we together? So also we're reaching this neckline, which is a resistance. We shall be expecting some minor retracement. Are we getting it? So this is a resistance that we expect the market to push to, and we expect some minor resistances, a minor pullback, right? So let's continue to the daily time frame. Now, when you come to the daily time frame, what do you observe? Now, daily time frame is very, very clear. One of the easiest trend identifications you can ever do. We had a break of this area. The market pushed higher, came and retested it. The market is now pushing higher. What do we expect next? The market to come and retest it. A very simple dynamics in the market. Higher high, higher low, higher high, higher low, higher high. So we are making this high. After next, what do we expect? The market to come and retest this. Are we together? So as the market is approaching this resistance here, it can slightly go above it. Watch for the change of trend so that you can trade to come and retest this. That's for people who have experience in trading. If you don't have experience, you can wait for the market to come back to retest this high here that has broken. Let me just clear this. When you don't have experience, wait for the market to come and retest this area here. After it's retesting, then look for change of trend using this movement coming down, and you can trade the continuation to the resistance. Are we together? So all the three time frames are communicating the same thing, plus the correlation to the DXY. It's also in connection, right? Now, let's go to the entry time frame. Of course, this is just structure identification. Now, entry time frame for those who want to trade the reversal, it's not yet there, right? There is no change of trend yet. We have a market that is clearly printing highs and lows. The market broke this high. It has come back to retest it. It is printing this high. Unless you want to just do some scalping, you can trade this like this until it changes trend. So when the market changes trend and breaks that, and that gives you the change of character or change of structure, the way you call it, and starts making lower lows, you can trade it up to that level that we have marked in, that you have identified in the bigger time frame, which is the daily time frame or weekly time frame, depending on the type of trader you are. Remember, we said intraday people use the daily time frame, while those people hold for a longer period of time, they use the weekly structure to trade. Are we together? So I hope this breakdown has given you a hint on the correlation between the currency index and the currency strength itself and how they correlate. It's not for the dollar, but since the dollar is what most people trade, I've made it on the dollar, but it's the same for other currencies like the JPY, the Euro, the GBP, etc., CHF, and the rest. So that was it for the video. I hope you guys now understand what correlation is. I've just given you one example. The others, correlation can be with the country's economy, like what your country exports most to get money out of it, or the activities that your country does. Also, the correlation can be in amongst the pairs on the securities that you're trading. together. For example, it can have USD JPY and gold. So you look at the side of which the common denominator is, which is the dollar. And then you see if the dollar is strong, meaning they'll be moving either positively if they're on the same side, if they're on a different side, meaning that we expect to move opposite directions. So that is it. We shall make another video explaining the other types of correlation. I hope you guys have a nice weekend ahead.